Hi guys, welcome to Traders Talk, and this is fresh news show which we are having, and let's check if everything is okay. Just give me a second. Okay, this week we are going to have a guest speaker coming in, and this guest speaker is actually going to do trade digest. Okay, and basically this show we will actually go through some trades which we have entered or potential trades. But of course, these are all for learning purposes, and it is not a trade recommendation. Yeah. So Dr. Binky, which is our guest here, will actually go through some trades and basically also the trade setups and the rationale behind the trades. Yeah. And we won't have this every week, as and when we have a good trade setup, which we want to actually share with you guys. Then we will actually bring up Dr. Binky. Dr. Binky, yeah. And we'll just, for those who have joined us, welcome again. And if everything is okay, give me a thumbs up so that I know that sound is okay. Yeah. And of course, I think last week we had our anniversary show. Anniversary means first year anniversary, which we had over 52 shows on Traders Talk. That basically for the past year, I have been with you guys talking about the markets, going through the ups and downs. Yeah, and of course, I will try to actually continue to actually do this through our Traders Talk. Yeah, and hope to actually share much more with you guys. And of course, for those who would like to actually take up trading, and especially trading in options, then of course this is a show for you. And of course, for those who actually want to improve their trading skills or just to understand better about trading and options, this is also a show for you. Okay, all right. We have actually gone through the market last week, and as I said, last week was actually an up week. And what happened was yesterday itself. The market was still actually slightly up, yeah, but not too strong. It also came down a little bit in between. Let me just put up the chart so you guys can actually see this. Okay. All right, let's put this up. Okay. So this is the S&P, right? And if you have joined us last week, what we have actually said is that we would still expect a slight momentum going up, yeah, but not without resistance, yeah. And of course, this week itself, we would actually expect it to actually come towards Wednesday, and Wednesday itself is actually a critical day because on Thursday itself, Jay Powell will actually speak in the morning. Yep. So of course, with this kind of speeches coming up, the market would actually tend to be jittery because they would not know what the Fed is actually going to say, whether it's good news or bad news. So most of it would actually stay by the sideline or risk off for the time being. And of course, if the market continue to actually go up within today itself, then of course they would likely take profit and get up for a while before Thursday. So yesterday slightly down 11 points. I think the Nasdaq was actually up. Nasdaq was actually also down about 100 points yesterday. Yeah. As I said, the market would actually be a bit overbought because it has actually very strong upward momentum for the past 1 week, which is about 7% up for this Nasdaq, and for S&P was actually about 6%. Yeah. So basically, the 2 weeks downturn here of about 11%, they actually went back to midpoint. And of course, and of course, if you uh, went through our newsletter yesterday, which we actually issued yesterday, of course, we are saying that, of course, when we are actually at the midpoint here, then of course there is actually also a potential for you to actually put in a neutral trade, yeah, for the S&P based on this kind of levels of about 4.2, and also towards the low of about 3.36. I think from yesterday, Delta 20 trade would actually be okay. And of course, yesterday itself, because it was actually slightly up. Then of course the I think when I actually did a Delta 20, the upper side was actually about 418 for SPY. Yeah, so this is SPX. Then on SPY, I put on a call spread, a bear call spread yesterday at 418 423. Yeah, 418 423, a $5 bear call spread, just to actually do some protection in case the market actually sells soft before the Fed meeting on Thursday. Yeah, so that is actually that. And of course, if the news post Thursday is actually bullish to the market, then of course, if you have another trade down here, which is actually a bull put spread, then of course that would also benefit from the positive news coming off Thursday, in case it comes. So you will have both side benefits. If it goes up, the put spread would benefit. If it comes down, then of course the call spread would actually benefit. Yeah. So these are the so-called neutral trades which we actually do. Yeah. Okay, so like I said, the S&P here would actually tend to look at some form of resistance at this level. At the four, actually at the 3839 level, they would form some form of resistance around this level. Yeah, and of course, yesterday itself, it came slightly down. Yeah, hitting some form of resistance. At this level, not surprising after a bullish week up. Yeah, so that is actually S&P, and Nasdaq is actually also more or less the same at the mid range here. Yeah, and of course the levels which these Nasdaq need to actually breach is again the 50 moving average, and of course after that the level here, I think it was about 13,000. This is another psychological level for it to actually breach in order to actually move back higher. Yeah, so I would say sideways trend again. Every month there is actually going to be a Fed rate hike meetings. Even if it goes up and some news might comes in, and then it might actually come back down again. Yeah, so we are actually going to trade it up or trade it down depending on the price action, and also if there are any major announcement coming through. Yeah, CPI. I think the next month CPI is going to be somewhere around mid of next month. Yep. So this is the overall market at the moment, and of course today itself, the futures, I saw it was actually going up right now. Yeah, it was actually going up right now. About 80 points up for Nasdaq and 25 points up for this S&P futures. Yeah, so anything is going to happen is it might continue to actually go up until tomorrow, and then from there you need to actually be a bit careful if you are still going on the long side. Yeah, if you have actually made some profits exit the trade and keep the profit to see what's next coming on post announcement on Thursday. Yeah, the Fed meeting on Thursday. Okay, so this is the market updates. Okay, so Dr. Binky, I'm going to bring Dr. Binky over, and basically this show, as I said earlier, we're going to do a trade analysis and to actually give you a perspective of the rationale behind the trade, why we actually entered the trade, and also give you a guide on the trade setup. How do we actually set up the trade, and also when do we actually exit the position? Yep. So I will bring this on to Dr. Binky, and Dr. Binky would actually run this with you. Okay, hi, this is Dr. Binky, and I'm going to actually run through a trade with you guys. Okay, and today I'm actually going to talk about Twitter. Twitter is actually the what is that, the app where you do your social messaging, messaging sharing of information. Okay, and of course, you guys would know that Twitter is actually being Elon Musk is actually put on to actually want to buy this Twitter, right? And he has actually offered $54 to actually do the deal, 54.20 if not mistaken. And of course, the deal currently is at the stage of due diligence. And I think based on the latest news, there is actually three conditions which Elon and also Twitter needs to fulfill. Of course, the first one is the financing. I think is still being worked out. The second one is, of course, this Elon Musk question Twitter about the number of fake accounts. And the third one is actually on this, what's that? The third one is actually the shareholders' approval. To actually approve the transaction. So these are the three major things on the deal. Let's put up Twitter. Let's put up Twitter here. Okay, Twitter currently is actually trading at $39. Twitter is actually trading at $39. Okay, Twitter is actually trading at $39. And if you look at Twitter, right, it is actually before that the lowest it actually went was about $32. This was actually before the announcement for the Elon Musk deal, right? And of course, after the announcement was made, it actually jumped from $39 here. It actually went up to $54, which was the offer price. And of course, post that, and with all the news that Elon is trying to exit the deal and all, the price actually came back down to about 39. The lowest was about $36, and now it's actually trading at $39. Okay, so what is this? What is this thing? If of course if the transaction actually proceeds, then the share price of Twitter would actually go to $54 or close to $54 if it actually proceeds. And of course, that would be closer to the things like the approval of the shareholders and whatnot. Then of course that would actually be going up back to $54. And of course, up till now, before the transaction is completed, you can see it's moving sideways, and it won't go up until there is actually more certainty that the transaction will actually proceed. Yeah, and of course, with the transaction lingering at 54, and there is actually no firm sign of it being cancelled, right? The price would tend to actually hold a certain value, would actually tend to hold a certain value in anticipation of the deal coming through. Yeah, and of course, when I say hold, means that it will actually hold at certain level, and you can see that for the past, when the first time it was actually talking about it being aborted, right? It actually fell down to a level of the lowest of $36. Yeah, and that was actually the lowest when they say that the deal is going to be aborted. Okay, and of course, post that, Elon said, "Oh, it's going to continue subject to this and this." Then it actually was trading sideways around here. Okay, so what transactions which we are actually going to do based on this kind of thing is that we are actually going to enter a neutral trade, that has no risk on the upside, because uh, when 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 the deal is at 54, if the deal proceeds, then it will actually shoot up very fast. And if you actually enter a trade which is neutral or has a cap, then of course you will actually lose out on that side, right? And of course, if you are actually entering a bullish trade, then of course, if the transaction moves up, then you will actually benefit from the transaction. And if the price don't move, then of course, if you do a neutral trade, you're actually also going to benefit. Yeah. And what trade is this? We're going to share with you a very peculiar structure. It's not a normal trade structure where you actually learn from most books or trainings out there. Is actually a very peculiar trade where very few people actually know how to structure this out. Okay, I'm just going to put on this slide to share with you the trade structuring. Okay, so if you look at this, right? Okay, what happened? Of course, Dr. Binky, right? Dr. Binky also put this trade up, proposed this trade to Tasty trade show, and this trade was also on last week's Tasty trade show, which basically talks about options and trading. Yeah, and basically, the trade involves what we call a jade lizard. And as I said, the rationale for the trade is that this trade structure has no risk to the upside, okay, because takeover is still pending, and then waiting for shareholder approval. And this will not happen before the expiry. We don't expect it to happen before the trade expiry. And of course, as long as the deal holds on and get delayed, we will actually so-called close the trade or wait till expiry, and then basically repeat the trade. I mean, the longer it drags, then of course we can continue to actually structure out this trade every 2-3 weeks. We can actually do the same. And of course, the downside is that is actually protected because of the transaction. As long as it still continues, then of course the downside would actually be protected. Even if it is actually cancelled, there is probably going to be the low support level would actually be around there to actually support the Twitter price. Okay, so this trade we call this a jade lizard, and basically what a jade lizard is actually a mix. It's actually a two how to say basically comprised of two trade structures. Okay, let me just put this up. Let me just put the drawing. Okay, so what it is actually a bear call spread. And if you guys know what is a bear call spread is basically selling a call, and then buying a call at a higher strike price. Yeah, selling a call at a lower strike price, and the one which we actually did was selling a 41 call and then buying a 42 call. Yeah, $1 with $1 with, and this trade was actually entered last uh, last Tuesday, last Wednesday. Last Wednesday, we actually entered this trade, but of course, on the fast market, it was actually put on the show on Friday. On Friday, but of course, on Friday itself, the price have actually moved up. That's the reason why during the fast market they did not actually put in this trade. Yeah, but of course, we did it earlier, so our entry level was actually still okay. So 41 call, 42 sell call at 41 and buy call at 42, $1 with. And basically for this, we actually collected we actually collected, I think, about 28 cents if not mistaken. Yeah, 28 cents if not mistaken. This is actually the trade. We did it at this price, trade price 107139. Yeah, so this was actually the 20 28 28 no 32 cents. Yeah, we did this at the 28 cents. 139. My math's very bad. Let me calculate what was the 139 minus 107. Yeah, 32 cents. Yeah, so this was actually 32 cents. 32 cents. Yeah, so we did this actually at 32 cents. 32 cents. Okay, and the max loss for this is actually 68 cents. Yeah, this is the loss. Max loss. Max loss. Okay. I will actually explain to you guys why we actually did this. We need to actually take a certain type of credit. Basically, we try to actually achieve around 30 cents credit. 30 cents credit, plus minus. Yeah, if you are slightly down 28, it's also fine. But we try to actually achieve 30 cents, and in this case, we actually got 32 cents. And because it is actually a $1 with, then the loss is $1 minus 32, which is 68 cents. Yeah, so this is actually the first leg. So how we benefit in this trade is, as long as Twitter stays below $41, then we will be able to actually collect the full premium on expiry. Yeah, if it falls below $41. So that's why we do not want the transaction to proceed. We just want it to drag. It's a neutral trade. We want the price to actually stay at 39 level. Current price is 39. Yeah, if it stays put here, then it's best. Yeah, we don't have to worry that it goes above this. Yeah, we do not have to worry. And of course, if you're actually doing call spread, if it goes above, that means goes above 42, for example, then you will lose 68 cents. Yeah, you will lose 68 cents, the max loss. Okay, but as I said, there is actually no risk to the upside. So how are we actually protecting this $68, 68 cents? Is actually to actually enter a short put. Yeah, a short put, which is basically a naked put. Okay, a naked put. Yeah. And of course, how we actually, at what price we actually sell this naked put is we actually want to collect a minimum premium of 68 cents. 68 cents for this short put. So within the options chain, on the put side, you actually run through the options chain and look at what price that you will be able to actually get 68 cents premium. Yeah. And in our trade here, we actually got 70. We moved down to the lowest, which is strike 34. We actually get 76 cents premium. 76 cents premium. Yeah. So of course, when we get 76, what happened is that 76, right? 0.76. Yeah. What happened is that if the share price of Twitter if the share price of Twitter is actually at 41, 42, right? This is the call spread, yeah. And then we did this at 34, yeah, 34, the short put, yeah, 34. Okay, so if the share price move above 42, yeah, then of course this short put, we will actually get the max profit of $76. Yeah, we actually get the max profit of $76. But of course, on the call side, we will actually lose the max profit. We'll actually go to max loss of $68. Yeah, $68. So net for this trade, if it actually breaches 41 or 42 level, we still make a bit of money. Which is $8. Yeah, $8. We still make $8. So that's why there is actually no risk on the upside. So if you structure this correctly, go on the basis of 30, 70. That means collect $30 on the call spread and collect $70 on the naked put. Then these $70 max loss for the $1 width will be protected. This will be protected if it goes up, and of course, if it trade within the range of between 41 to 34 here, then of course you will actually get the max profit of in our case here 108. But of course, if you structure out exactly 70-30, then you actually get a profit of $1. Yeah. So this trade, I think this is actually the second round for us to actually to do this trade. The first expiry was on 15th of June, and we have already exited with a max profit on that, and now we're actually going on the second cycle of 15th of 17th of July, 15th of July expiry. And of course, till then, basically, is about three more weeks. Yeah, and after about how many days? After about 3 days into the trade, Wednesday, Thursday, Friday, and yesterday, 4 days into the trade. Currently, we are in profit of about $33, which is close to about 30% of the max profit of the trade, which is 108. Yeah. So this is actually the Jade Lizard, which we actually entered on Twitter. Twitter. And of course, this kind of trade you can actually structure not only on Twitter, which has this corporate action. You can actually structure Jade Lizard on shares, on stocks which you don't think that it will actually it will actually go up. You don't think it will actually go up. It is actually trading sideways, but the tendency for it to actually, there is some form of risk for it to actually go up. Then you actually protect it with the put one. That means basically you do not expect the share to come down, because once if the share comes down, then of course you will actually make a bigger loss on the put side, on the naked put. But of course, on the call spread, you actually get the max profit. But of course, that max profit will not be able to actually protect your the losses from the naked put. Yeah. So, but of course, if you guys are doing naked put, you need to actually also have this assumption, or this basis that you do not also mind to buy into the shares or pick up the shares in case it breaches your short put strike. Yeah, you also have to have that assumption. And even if you do not want to pick up the shares, if it actually comes down, then of course the other option is for you to actually continue to roll the trade week to week or month to month, to continue to roll the trade until the stock price actually breaches back the short put. Yeah. So this is the trade which Dr. Binky wanted to show you guys, and of course I will actually look out for more trades, and this is all for learning purposes, and hope you guys have actually learned something. today, and I am happy to actually share with you guys trades which we enter, or trades, potential trades which we actually want to do, or even analyze trades, or answer questions which you guys might have on trades which you actually want to enter. Dr. Binky can also what is that, digest or dissect digest or dissect it. Yeah, so until then, I will catch up with you guys again on the next trade digest series. Yeah, bye bye. Okay, so how was Dr. Binky? Okay, I hope that Dr. Binky have given you guys a perspective of the jade lizard, and of course, jade lizard is actually a very a very profitable trade structure, and basically for this type of trade structures, the probability of profits which we actually get is you can actually structure 60-70%. It's actually very, how to say, very safe, I would say. Also to a certain level, it's also safe because the on the it's actually on a neutral trade, and you are actually protected on both sides. On if the price goes up, then of course the short put will profit, and of course when the price comes down, the bear call spread would actually give some form of protection to you guys. Of course, not a lot, because the amount of premium which you get is only 30 cents per $1 width. But it's okay. I mean, sometimes the stock move up and down, right? We can also, I mean, if you guys are more advanced into managing this trade, right? You can also staggerly leg out the trade. Leg out the trade means you actually exit one side of the trade, first. And then when the price goes to your direction, then you actually exit the other side. But of course, these are more for more advanced traders, once you actually understand how to manage the position and the risk. Yeah. So okay, if you guys have questions, then of course, please by all means post in the chat. If you guys do not have any questions, then I will catch up with you guys next week. Do subscribe to our newsletter. If you have not done so. Just click the link which we have actually posted this week's newsletter. You can actually go through to read it, and of course, if you subscribe, then we will actually send the newsletter to you directly into your mailbox every week. Yeah. And the other thing is, of course, please uh, like and share our show, so more people will actually join to benefit from what we are actually sharing with you guys. Okay, so until next week, all the best in this week's trading, and we hope that you have actually liked our new series, Trade Digest by Dr. Pinky. Bye bye.